Central banks around the world influence trillions of dollars every single day. Governments issue it, big banks move it. But here's the thing nobody tells you. None of them actually control it. Not in the way you think. If money isn't really a physical thing, if it's just an agreement, a shared belief, then who actually controls it? It's a question that feels loaded, maybe even a little paranoid. But it's not. It's one of the most important questions you can ask about how the modern world works, and the answer isn't what most people think. When people say who controls money, they usually mean one of three things: the government, the big banks, or some shadowy group of corporations. Those ideas aren't random. Governments issue currency, banks move it around, corporations accumulate vast amounts of it. If you're trying to understand power, following the money makes sense. But the word control is doing a lot of heavy lifting here, and that's where things get interesting. Let's start with governments, because that's the most visible part of the system. Governments do have real power over money. They issue it, they decide what counts as legal tender, they collect taxes in it, which creates demand. But here's the limit. They can print more of it, but they can't make it worth more. They can regulate it, but they can't make people want to use it if trust collapses. Zimbabwe printed trillions of dollars in the 2000s. At one point, $100 trillion bill couldn't buy a loaf of bread. The government had total legal authority over the currency, but the currency had zero real value. That's the limit of control showing up in real time. Then there are central banks, the Federal Reserve, the European Central Bank, the Bank of England. These institutions manage the money supply. They set interest rates, which influence borrowing costs. They buy and sell bonds to add or remove money from the economy. They try to keep inflation stable and the financial system from collapsing. When a central bank raises interest rates, borrowing gets more expensive, mortgages cost more, businesses slow down. When they lower rates, money flows more freely, people spend, the economy heats up. But central banks don't control what money is. They manage how much exists and how it flows. They're adjusting variables inside a system that depends on collective belief. And then there are the commercial banks, the ones you actually interact with, Wells Fargo or Barclays, for example. These institutions do something that surprises most people when they first learn about it. They create money, not in the government sense, they don't print bills. But when a bank gives you a loan for a car, a house, a business, it's not handing you money that was sitting in a vault somewhere. It's creating a new deposit in your account. That deposit is new money. It didn't exist until the moment the loan was approved. This process is called fractional reserve banking, and it's how most of the money in modern economies actually comes into existence. Not from governments, from loans. Think about it this way. Imagine a bank as a kind of trust amplifier. You deposit $100. The bank keeps a fraction of it as a reserve and lends out the rest. That loan becomes someone else's deposit, which gets partially lent out again. $100 of physical money can support thousands of dollars of loans, deposits, and economic activity. Does that mean banks control money? In a sense, but only because people trust the system enough to participate in it. Here's the part most people miss. Power over money doesn't live in any single institution. It lives inside the system itself. In 2008, banks had all the legal authority they'd always had, but trust collapsed. People stopped lending to each other, credit froze, the system seized up. Not because the rules changed, but because belief broke down. A government can issue currency, but if people stop accepting it, it becomes worthless. A central bank can lower interest rates, but if businesses don't borrow, nothing happens. A bank can offer loans, but if no one believes they'll be repaid, credit freezes. The power isn't in the printing press, it's in the collective agreement to keep participating. So let's be precise. There's a difference between control, administration, and trust. Control implies total authority, the ability to dictate terms. That's not what's happening here. Administration is what governments and central banks do. They manage the system, they set rules, they try to keep things stable, but they're operating inside a framework they didn't create. Trust is what makes the whole thing work. When trust is strong, money flows easily. When trust weakens, the system seizes up. Think of it like a language. A government can create an official language, print dictionaries, fund schools, but it can't force people to speak it at home. That happens through culture, through use, through collective participation. Now, here's where things get interesting. For most of history, money was physical, coins, bills. That made control feel concrete. Someone minted them, someone printed them. But today, most money is digital, numbers in a database. And that can feel unsettling. If money is just information, who's updating the spreadsheet? Who decides what the numbers say? But digital money didn't change what money is. It just made the underlying nature, the fact that it's always been about collective agreement, more obvious. Your bank balance is a number on a screen, but so was the entry in a ledger 200 years ago. The format changed, the principle didn't. Some people have turned to alternatives like Bitcoin and Ethereum, seeking decentralized control that doesn't rely on governments or banks. But even crypto relies on the same core principle, collective agreement. A Bitcoin is only worth something because enough people agree it is. The moment that agreement breaks, the price collapses. The technology is different. The fundamental nature of money is the same. And if you've ever sent money instantly with an app, you've experienced the upside of abstraction, convenience, speed, access. The digital layer makes money more flexible, not less trustworthy, as long as the system behind it holds. So why does any of this matter? Because misunderstanding who controls money leads to bad conclusions. It fuels conspiracy theories. It makes people angrier than they need to be. It creates the sense that the system is rigged in ways that are both vague and impossible to fix. More practically, it makes it harder to understand how the economy works. If you think money is controlled by a small group in a room somewhere, you'll misread inflation, interest rates, recessions, growth. You'll be trying to solve the wrong problem. But if you understand that money is a system of collective trust, administered by institutions with real but limited power, things start making sense. You can see why central banks raise rates during inflation, why governments can't just print their way out of debt, why financial crises happen when trust breaks down. And you can make better decisions. You can evaluate policies based on how they affect trust in the system, not just who's in power. You can understand why diversification matters, why financial literacy matters. The system is messy, it's complicated, but it's not a mystery, and it's not rigged in the way people imagine. So, here's where we end up. Who controls money? Governments influence it, central banks manage it, commercial banks create it through lending, corporations accumulate it, but none of them control it in the way people imagine. The real answer is this: money is controlled by the system itself, and the system is controlled by everyone who participates in it, including you. That's not a feel-good platitude, it's a structural reality. The moment collective trust collapses, the system stops working. No institution can force it back into existence. Understanding this doesn't make you powerless, it makes you clearer. It lets you see the financial world as it actually is, not as a shadowy conspiracy, but as a massive, messy, interdependent system held together by agreement. And that's worth understanding. If this kind of calm, grounded explanation is what you're looking for, there's more to explore. We've covered what money is, how inflation works, and now, who really controls it. The goal here is simple: make the financial world understandable, one concept at a time.